Good evening, 29 minutes to 7. Classic Business and Classic Government brought to you by Telkom. I'm Glenn Lewington. Well, tonight we conclude our discussion that we've hosted this week on rewards and loyalty schemes in South Africa. It's been a rather interesting discussion and some facts and figures before we get into tonight's discussion. There are approximately 80 reward schemes in the country. The most popular with consumers appears to be cashback incentives. On average, a cashback scheme gives only about 1% back to the customer. Not many customers in the country are aware that there's linkage fees charged by many reward schemes. Consumers are also often not aware of the rules and regulations of award schemes, and South Africa has seen a boom in reward schemes since 2005. Though rewards may seem free, they are built into the cost somewhere along the line, even if it's in the company's marketing budget. Most members of airline reward schemes in our country are corporate flyers, and with the changing economy, many schemes have changed the reward system to make the scheme more sustainable to the company, not often to the client. Well, to kick off tonight, here's Jolande Duvenage, the CEO of eBucks. How old is eBucks?
We were launched in 2000, way back when it was at the height of the .com era, so it was a brave and bold, adventurous vision that gave birth in 2000.
Banks at that stage were not embarking on reward schemes. What made First National Bank decide to have a reward scheme?
I think generally the leadership structure in FirstRand is quite visionary, and it wasn't just a reward scheme per se. It was very much this all-encompassing e-commerce offering that FirstRand wanted to launch as part of the e-commerce drive. And, you know, it had an internet banking component to it. It had this internet payment solution. It had, and then the whole rewards program with the virtual currency that sat in it called eBucks.
And the actual currency eBucks, what is the value of an eBuck? I know it has a value within the scheme, but does it have a true value?
Absolutely. The eBuck is pegged to the rand, so it has a very clear value. It's totally transparent to members. And if you've got 10 eBucks in your account, it means you've got 1 rand sitting around ready to be spent. So
the spend model of eBucks, when it started in 2000 and where it is now in 2012, what has changed in terms of how people can earn the eBuck?
From an earn perspective, I think the model has become a lot more sophisticated. The bank is by far still the main allocator of eBucks. In the last year alone, the bank has allocated close on R500 million worth of eBucks. But in the same breath, we've also got a number of retailers, obviously a lot more now compared to where we were in the early days. And you can earn from these retailers as well. So it's very much in that banking space where we started off, that's become more sophisticated, and in the retailer level.
eBucks made a few changes in terms of how eBucks are earned, and if I'm not mistaken, your home loans and cars, like many banks, was removed. Is that correct?
In the early days, I think, you know, it wasn't like we could just reach out to these handbooks to figure out exactly what these models should look like. And, you know, we also had to learn along the way. But I think the one thing we knew is we wanted to learn quite quickly. And what we then did was we allocated eBucks both on transactional products. So transactional products are very much like your check card and your credit card. And then products like your lending products, your home loan, etc. But we came to realize that, you know, just on a very practical level, when a customer has to make a decision which home loan am I going to go for, it typically ends up being the one with the lowest interest rate. And I think that's where some of the reality needs to kick in when you build a rewards program, is to really understand what types of behavior can you drive through the rewards program and what not. You know, now we've introduced an ability again for customers that when you spend your eBucks, you've got the ability to qualify for a eBucks tier discount offering. And there, the fact that you then hold a home loan and you comply to certain rules gives you the ability to boost your tier, which then increase the discount that you can get.
What is the most complaints you have from customers about eBucks?
You know, I think it's always so exciting when we look at this, because I always say a very good measurement to try and understand whether your rewards program is working or not working is just to one day switch it off. And right now, I can honestly say, I think if we're going to switch off eBucks, it's going to cause absolute mayhem in the market. And the reason why I can see it is, when we change rules, it very much does affect our customers. Those that are better off phone us and tell us how happy they are, and those that need to change behaviors, we hear from them as well. So it varies. I mean, there are different things that obviously is relevant to different people. Quite a variety of things.
But when you have a client that's been with the program for 12 years and you do make changes, as you say, that is according to, and you use the example of bonds, surely people get upset when that is removed from the system because that's what they've used to earning and suddenly they don't have that anymore.
Absolutely. And I think the intention is never just to outright remove people. We're not in that game, but in the game that we are in is to end up building a rewards program that is sustainable. And, to end up with a sustainable program, it means that it needs to be a win-win both for the customer and for the bank. So we're looking for those transactional behaviors that would be beneficial to both the customer and the bank. And from time to time, literally once a year, we do sit down with the product houses and we review the rules and make sure that it is still in line with where they need to go with their businesses, but in the same breath, also speaks to where a winning situation for the customer will be.
Jolande, how is an eBuck funded? I know to the client it seems like you're getting it for free, but somewhere down the line, someone must be paying for it.
Absolutely. I think this comes back to that sustainability. At the end of the day, there is an income statement that sits in a relevant product house environment, and they need to have a very deep understanding of what is the behaviors that they need to see from customers that would make sense for customers to do, but then in the same breath that they are happy to pay eBucks for. And I think, it's getting that mix right that ensures a sustainable program at the end of the day.
But how does eBucks remain sustainable? I mean, I say it can't be just something that you give away. How does it make itself as a profitable entity within the bank?
I'm probably one of the CEOs that have got a more interesting dynamic. I go to bed at night and I have my sleepless night around how I make the bank more profitable. So not many CEOs, I think, end up doing that. But, for me, it is ultimately thinking through what is the right behavior that the bank would require. But in the same time, how can we go out there and really delight members and wanting and put them in a position where they would really like to give more of their business to F&B.
And the members of eBucks, as in your partner members, whether it be airlines, car hires, hotels, do they pay eBucks for being members? And when people swipe their cards, are they paying the bank for that transaction?
So from our perspective, we very much have suppliers. Those are typically people that will end up just providing spend opportunities in the world of eBucks. And you can imagine there we obviously shave something off. But in the same breath, we also have long-standing partnerships where people in their own right allocate eBucks for the behavior that they are looking for, and then spend going back into those environments. And, there is a commercial deal in place, but it is obviously very carefully modeled that it is of value to the partners that are playing with us.
Do you think that the average eBucks member can afford, if we're just looking at an example of 55,600 miles for a ticket to London, that actually requires quite a large spend to get 55,600 eBucks. Does your average eBucks member ever qualify for that?
I think we are quite realistic when it comes to this model. If you look at the F&B base, it spans across the whole economic population in South Africa, and we've got different rewards offerings that talk to these different populations, or these different segments, should I rather say. So obviously we've got an airtime reward offering for our one segment, which is very, very popular with that segment, and they very happily show the right banking behavior, and that eBucks has got incredible, the airtime that they get on their phones has got incredible value to them. So, I think it's not always about giving you that flight internationally, but again, I think in the case of eBucks, it is quite accessible, quite simply, if you end up being on that rewards tier and you end up in the upper rewards tiers, you can get like 40% off in terms of the eBucks that you need to access that flight. So all of a sudden, I need far less eBucks to access that flight. So by showing the right banking behavior, by banking smarter, again, I can access these deals at a discounted rate.
What is the most popular reward that's redeemed from members?
Oh, everybody has got their most popular one, and we see it all the time. But, things like everyday essentials does do very well. People love the fact that they can spend their eBucks on fuel, for example. And, it's just so interesting to see how typically in the whole fuel price increase cycle, customers will take the time and go and fill up using their eBucks the night before a price hike, which really is always very amazing to me, how much people end up using these eBucks almost as a real currency. But then things like airtime, gadgets, everyday spend opportunities like the discounts, macros, those all do exceptionally well for us.
And what about the criticism of eBucks that if you didn't actually acknowledge that you would have, and you can correct me if I'm wrong, that if you didn't acknowledge that you wanted to have email correspondence with the bank, that you wouldn't receive eBucks. Is that correct?
On one of the products, that is a requirement. But it's not a overall program requirement. We've got it on one of the products, the F&D products. And I think I've got a very deep appreciation for people and their concerns around, why do you now ask me to give you consent? What is it that you want to do with it? Are you going to spam me now? Are you going to sell my data to a third party? And that is not the intent at all. I think at the end of the day, these product houses are also just in a position where they're saying, we want to give you these rewards and we want you to have an absolutely amazing experience. And part of that is also then to communicate to you and, share the amazing offers that is on the table up for grabs, and being able to communicate to you in general around that bank product offering.
Jolande, as you're saying, there's a lot of changes that have happened in eBucks. Whether people are happy with them or not, it's been a very successful rewards program, if not one of the largest ones in the country. And I'm sure as the years progress, you're going to have to evolve again.
I think it's probably one of the really exciting reasons why so many of our staff end up staying with us is that constant involvement. I mean, it's one program, people really by nature just enjoy to innovate. And, I can just see how excited people get in our offices when they come up with new ideas where they think like, people, customers will just end up loving this. And it's very, very rewarding for us when we bring out new offers and we can just see what the response in the market is like.
Jolande Duvenage, CEO of eBucks, thank you for your time on Classic Business and Classic Government.
Standard Bank's Share Plus investment is back by popular demand. This October only, Share Plus offers returns of up to 23% over 24 months. Your initial investment is guaranteed. There are no fees or commissions, plus you can get started from as little as 25,000 Rand. Move to real banking value. SMS Share Plus and your name to 31645.
Standard Bank, moving forward. An authorized financial services and registered credit provider. Terms, conditions and standard SMS rates apply. Linked to performance of the FTSE JSE All Africa Index Top 40.
Classic Business and Classic Government brought to you by Telkom. It's 7:15. I'd like to welcome our studio panel and one guest on the phone. I'll start with Amanda Cromhout, CEO and founder of Truth. Amanda, good evening to you.
Good evening, Glenn.
Yaron, Assabi, CEO of Digital Solutions Group. Yaron, nice to have you in the studio. That's good evening to you.
Good evening.
Dr. Craig Nossel, Head of Wellness, Discovery Vitality. Thank you for joining us, Craig.
Thanks for having me on the show.
And Sid Vianello, Retail Analyst at Nedbank. Sid, nice to have you with us.
Thank you.
Amanda, if I may start with you, sorry, I've kept you holding on the line a bit long there, but I believe you consult on loyalty programs. Tell us your feelings and findings on loyalty programs in South Africa.
Glenn, what I'm noticing, which I've been listening to for some of the broadcasts this week, is you've got the South African market has developed so rapidly in the last couple of years. So if you'd asked me a few years ago where South Africa stacks up globally, I would have said we're severely lacking in the loyalty landscape. But today we are most definitely on the loyalty playing field on a global level. But when I say that in terms of the fact that we've got loyalty programs where I think we can really do a lot more, and the opportunity still sits with all the brands who have loyalty programs is how to really maximize the experience for the end consumer and maximize the profits for themselves, the brands who engage in these programs.
Amanda, do you think a lot of the loyalty not a lot, let's say the word a few, are just gimmicks?
There are gimmicks out there, of course there are. I mean, no doubt about it. But I think the recent developments in the marketplace are robust, solid programs that have come out of strategic intent. What I mean by that is they're not doing it just to give away points. These organizations are doing it because they intend to serve their best customers better. They give their customers points for loyalty, for spending with them. And in return, they gather a lot of data. So a lot of organizations these days understand that the power of these programs, and that's what's born out of the global programs like Tesco's, is how they gather the data and they use that data to drive much better business decisions across their entire organization.
Amanda, what's happened to our economy that we've seen this real upsurge in reward programs? And it seems to have been around 2005. We went from basically probably about 20 reward programs. We've now got 80. What happens in an economy that actually causes that?
Well, I think the actual end consumer is more and more demanding, and I think offering basic products and services is no longer enough. And in order to really be able to serve customers better, you need to get closer to them. So the marketplace is a lot more competitive, and organizations who can truly talk to their customers in an engaging way, in a tailored way, in a way that is meaningful. And they can only do that if they understand their customers, which they can do if they are having a relationship through loyalty programs. And
a loyalty program is also probably a good sign for our economy, that it shows that our economy is indeed linked to a global market now.
Yes, I think so. I mean, obviously, since 2005, this economy has been up and down and various. So I think we have been playing catch-up, don't get me wrong. This marketplace has definitely caught up. They needed to catch up. And as I said earlier, the opportunity now is really to use these programs. Don't just keep throwing programs into the marketplace, but making them meaningful for the end consumer. And that isn't just points. What I really mean by that is, don't just give me points. Talk to me about things that I want to talk about as the end consumer, when it is right for me, in the place that I talk, which could be social media, which could be via my mobile. It's not just about these brands pushing their messages at me willy-nilly. It's about them understanding me better and talking to me with relevance.
Yaron, you're nodding. What are your thoughts?
Well, I totally agree that it should be about making the experience relevant, and it's all about customer experience. I think at the end of the day, customers have a lot of choice, and technology makes it easy to communicate with customers. We're particularly interested in the mobile space, so I think a lot of consumers in South Africa have many cards in their pockets, and how do you differentiate it? So, for example, smartphones, we have an application that can reside on a smartphone that will allow you to have all your cards on one application, so you never forget your card, because the phone is a very personalized device that you always have with you. I think there's a statistic that about 60% of men go to sleep with their phones right next to their bed, so it's definitely something that we'll have close by. And I often forget a loyalty card, but I'll always have, and some of the loyalty programs actually request you to have two cards available to be able to identify who you are at the point of purchase. Where your mobile phone's always with you, you can easily use the smartphone capability, which is location aware, to see offers that are nearby you, that are relevant to you. And all your details are stored in the smartphone application and can be shared with the retailer at the point of purchase. So you can simply use QR codes or use other technology to be able to integrate into the point of sale. So the experience is seamless, it's a lot easier, and a lot more personalized and a lot more relevant to the customer.
That technology on your cell phone, is it accepted in the shopping centres by the airlines?
Absolutely. So worldwide it is. I think South Africa is catching on a little bit with technology. We're currently in discussion with a lot of big retailers, airlines, shopping centres, to be able to make this application available. It currently works on all phones that have internet capability. Not all South Africans have internet-capable phones, but certainly the upper LSM, the smartphone penetration is quite high, so it's very, very relevant to brands like Discovery that deal with upper LSM type customers. Certainly, it's very, very relevant to them. Yeah.
Craig, Discovery, the Vitality program, and I don't think it makes any secrets of that. You pay for it. People know you pay for it. It's offered to you. You take it, you don't take it. But it's a very successful program. How much do you find the people that subscribe to it actually use it?
Well, the utilization is actually incredibly high. And I think what's important for us is to maybe differentiate. We don't see ourselves playing purely in the loyalty space. In fact, it's very much a wellness or behavior change program. So part of it's key to our business, I think, as was said earlier, the strategic relevance of a program like Vitality for Discovery as a group is quite critical. So when you've got a health business, we need to get people to be healthy, focus on preventative care, and get them to lead a healthy lifestyle. The same within the life business. We launched a short-term insurance product about a year ago, and Vitality also underpins that in getting people to drive better. And in all those aspects, we've seen that it improves outcomes. So firstly, you're attracting people in, so it has a differentiator value. But in addition to that, it's getting people to lead a healthier lifestyle or drive better, which really underpins, I think, the financial side of the model. So it makes it robust, but also strategically very important. And what we see, some people come into the program and they will engage. They may take out the clicks benefit or buy healthy food or do certain components, but as they go through, they tend to engage more and more in the program. And that's exactly what we want, because the things that we're rewarding people for is for leading a healthy lifestyle. So currently we have over 500,000 people going to the gym, over 300,000 families purchasing healthy food at Pick n Pay. We've now partnered with Woolworths as well. And all those things really lower the barriers for people to lead a healthy lifestyle, which makes sense to us as a business.
How do you exactly, my word I was going to use, it is a business.
Yeah. So
how do you make money out of a loyalty scheme?
Well, in fact, Vitality is not there to make money. So if you look at our numbers every time when we release the numbers, there is some profit, but it's not that it's a profit center within the business. It's more around the value that it adds to the other parts of the business, and as you say, underpins what Discovery does. And we've got Vitality now in the US. We've got close to 2 million members in the US. We've partnered with Humana, the third largest insurer in the US. We've got our business in the UK. Also, same model with Vitality underpinning a life and health insurance. And in China also we launched about 2-3 months ago with Ping An, who's actually, I think, the second largest insurance company in the world. So the idea really is tying in with insurance where we're able to get people to do healthy things. And I think that's where it is slightly different from a traditional loyalty program where it's buying more products. In the Vitality space, it really is, I think, greater alignment between what the consumer should be doing. And we know, often we wake up in the morning and we don't go for that run or do that exercise. We eat the wrong foods. So we try align to what the health needs are for consumer. And that makes sense to us as a business. But Vitality in itself is not driving to be profitable, but rather how it works within the Discovery stable.
Using gym chains as an example, just so we get an understanding of how you work with your partners. If you take out a Vitality membership at a gym, you pay an upfront fee and then your gym membership gets reduced.
Correct.
How does the gym make money out of that?
So we contribute towards that. So people pay a fee to be on Vitality, as you said earlier. We contribute towards that, and obviously because of our scale, so we've got 500,000, we're probably 60% of the Virgin Active business. We able to, using, I guess, our purchasing power to get better deals for our members through the gym. And as we know, when a gym's investing in buildings, there's obviously not small amounts of capital that go into that. You want to make sure that people are going. And you see, particularly in these tougher economic times, they have a higher churn rate. Within the Vitality program, it keeps people in the gym. So it really is a partnership that benefits all parties. And we've actually published a paper. We've partnered with, working with academics from UCT, from Harvard, a longitudinal study showing the health impact of getting people to go to gym. And so that obviously follows through around lower healthcare claims, lower hospitalization, people getting out of hospital sooner. So all that benefits, as I said, Discovery Health, Discovery Life around morbidity and mortality. So as a business, it makes sense for us to be investing in healthy things. Same thing with healthy food. We've actually received grants from the National Institute of Health in the US to study the healthy food program. And it really is quite unique globally. We've recently partnered with Walmart in the US, with Sainsbury in the UK, with Tesco in China, and as we know in South Africa with Pick n Pay and Woolworths. So taking those concepts and expanding them on a global scale.
So you're a retail analyst for Nedbank. What are your thoughts on loyalty programs? Much ado about nothing?
Well, I think it's a bit of a mixed bag. There are loyalty schemes which have been successful, and I think there are other loyalty schemes which, unfortunately, I don't really believe have been successful at all. And I was having a debate with Craig before we started this program.
Is Vitality one of them?
No. We were talking. Well, we were talking about the Pick and Pay scheme. Now there are 5.8 million members. It's been running a year. I know Pick and Pay are already trying to say to, tell us or try to get us to believe that, which is true, of course, that the average Pick and Pay cardholder spends, I don't know what percentage more than in the store than a person who doesn't have a card. Well, that's understandable. The reason why that person has the card is exactly for that reason, because they would be a bigger spender at Pick and Pay than somebody who doesn't have a card, who's probably a pretty much of an infrequent shopper at Pick and Pay.
But the points on the Pick and Pay thing, and Sid, if I can ask you to elaborate on while you're explaining it, it's very low what you get back.
Well, it's worth 1%. It's effectively worth exactly 1%. Pick and Pay then have let's call it a secondary and an incremental and an additional scheme with Discovery that allows you to obtain an extra few percentage points.
Up to 10%.
Yeah, up to 10%, depending on your status with Vitality and what have you. But at the end of last year, Pick and Pay very conveniently changed the rules. Unfortunately, and I know Pick and Pay not going to like what I'm going to say, but I think it was very badly communicated because it was sent by an SMS message that you must now change something on, go into the website and change something. Presumably, if you didn't do that, you wouldn't be getting any points at all because the whole scheme was changed. But for those persons who are not at the 10% level, the effective value of the incremental benefit was halved. Now, Craig says I'm wrong, but I'm a member, so I've worked it all out, and for me, the value is halved. Nonetheless, so I get the 1% and I get an additional 1%. But the fact is I was getting 1 plus 2. Now I'm getting 1 plus 1. But more importantly, from Pick and Pay perspective, and remember I was saying that some of the schemes have worked, some haven't worked. In the case of Pick and Pay, only last week they released their sales figures for the 6 months to August. Their turnover growth is running at about half of that of their competitors. And we're talking about ShopRite and Spar. Now, there are two ways to look at it. Either the scheme has so far been a complete disaster because it hasn't raised the turnover growth. Alternatively, if they didn't have the scheme, the turnover growth may well have been 0%, and the scheme actually produced an extra 6.5% to get up to that figure. Of course, we'll never know that, and I don't think it's scientifically possible to calculate that one in any event. But from my perspective, I don't believe that scheme has been successful. The airline schemes, I don't believe have been successful simply because it's virtually impossible to get an upgrade or to get a ticket for the time of the day that you would like to fly. But on the other hand, let's take the Clicks one. The Clicks one's been running for many, many, many years. They have I don't know how many million customers, and believe it or not, it still grows every single year by about 200,000 to 300,000. It's growing quite strongly. It continues to grow. The value is not that great. You can work it out. With Discovery, I think you get about 8% or something.
50, up to 50.
Up to 50. But if you're not a Discovery member, it's worth about 2%. But I speak to people and I ask them about it. And why do they go there? Because they feel. And remember, this whole thing's about relevance. They feel they are being rewarded. Every 3 months they get a little voucher. And they actually feel excited about receiving this voucher because you can go back to Clicks straight away and spend that money. So it's actually brought customers into the store. That's why more people are becoming members. From a turnover perspective, obviously their arch rival is a private unlisted company. But from the evidence that we have, I think the private... The opposition is probably performing better than Clicks, but nonetheless, Clicks have managed to use that card to maintain a certain amount of relevance, given purely from the perspective that more people, after many, many years, more people continue to sign up for the benefits of the card. So I think to me it's a kind of a mixed bag. But at the end of the day, I've always said to myself, nothing comes for nothing. Somebody's got to pay for it. At the end of the day, I guess the consumer's paying for it. I don't believe the retailers are paying for it. I think at the end of the day, it gets built into the GP, it gets built into something. And the important thing, and of course from a retail perspective, now comes the big debate, that if everybody else has got one, then do you compete by not having one, or do you have to do you have to follow the thundering herd, which is the old Merrill Lynch strategy.
We just need to take a short break, and you're welcome to elaborate on that. Classic Business, Classic Government, brought to you by Telkom. 7:01, Classic Business and Classic Government, brought to you by Telkom. Craig, you had a response to Sid.
I mean, one of the things, just to maybe elaborate on Sid's saying, is just around the process. And I think that's where you look at something like Clicks. The ease of using their loyalty program is actually quite high. People enjoy, to get the card is not a big hassle. You then get sent your the cash back. And people like to use it, and that excitement of getting something in the post. I see my wife gets it on a regular basis, and she much prefers that to other forms of getting of some of the other loyalty programs. So I think that ease of use, we've seen it the same with our partner with Ster-Kinekor. The ease of getting a card, you swipe the card. As soon as you create hurdles, I think is where also some of the confusion and the hassles come into play. And it's a big challenge for us as a business. We have multiple partners. And we need to make sure that the ease of use is there. So when someone is buying healthy food or they're using their credit card in one of our partner stores, we make it as easy as possible, because that's when I think a lot of the things actually fail.
Craig, Sid raised a point about competing and whether you start a reward program or not. Now, it's very interesting that Discovery and Vitality is virtually unchallenged. Why?
I guess you need to ask our competitors that, but I think the reality is that the way that strategically we work through, you look at a brochure and it may seem quite straightforward in giving a discount here and a discount there, but there's a significant amount of research, of data analysis that goes into developing this product, the actuarial, the clinical side, and we're really not competing, as I said earlier, in pure loyalty space, but rather around behavior change. And we're working with people like Dan Ariely, who's a behavior change, a behavioral economist, and understanding how you get people to do the things that we believe are important from a health perspective. And we have seen competitors come out with programs, but they seem to be, if I look at it, a little bit bitty, and they really don't come together and I think have a range of sort of incentives and incentivizing the right sort of behaviors.
Yaron, mobile technology and loyalty schemes, the mobile industry is probably the fastest growing industry on the African continent. Why are we not seeing give us more back from mobile? It's expensive to operate mobile phones, let's face it. We've got one of the highest costs in the world. Why are we not seeing more done in that arena?
There are programs from all the mobile network operators in South Africa.
Tell us about them.
Well, MTN's got their program where they offer you on a Thursday, they have the Mahala program.
But you have to be on the phone at like 2 in the morning. It's not really going to help.
They've also got the MTN rewards, and so does Vodacom. They've got Yebo rewards, and so does LC. I think they're not as maybe openly communicated, and because we're primarily in a prepaid market, okay, I think that postpaid kind of lends itself more to reward programs because you get to understand the customer. Prepaid is very infrequent, right? So the whole idea of a loyalty program is to enhance frequency and wallet share from the customer. And because prepaid, you're not sure if the customer is actually going to stay with you. He might recharge with you or not, or he might go and recharge somewhere else. He can get his airtime everywhere. It kind of in a primarily prepaid market, it's tough. But there's very nice ways of actually creating loyalty even in a prepaid market. I mean, one of my biggest issues as a consumer is that prepaid is generally targeting the lower level of the LSM, and they actually pay in advance and they pay more. And that doesn't make sense. In a traditional business sense, if you pay COD or you pay in advance, you normally get a discount. So I think there's a lot of opportunity to change the model within the mobile environment.
That was going to be my question.
Yeah.
Do you think we'll see changes in the mobile environment?
Definitely. I think we've reached in South Africa 120% penetration, which means there's saturation in the market, and it's all about switching customers now, and loyalty is going to become very, very important. It's going to be not so much about the loyalty, it's going to be about the value that we give the customer at the end of the day. And I think the mobile technology in itself lends itself to loyalty very, very nicely, as I mentioned earlier, because you have so much information about the customer. For example, you know where the customer is. at the time. So the localization, the ability to understand that I'm at a shopping center and making me relevant offers maybe from the loyalty program that I've opted into because I'm making the smartphone application location aware and my phone has got GPS, it allows me to get offers that are more relevant to me because of the location of where I am. It's also about social integration. A lot of the youth in South Africa use their mobile phone for Twitter and Facebook. So it's about integrating your loyalty program into social and getting customer advocacy.
But that is happening
through
at the
social.
moment.
Yes, but it's much easier to do it through the mobile internet because a lot of people use Facebook to check in to where they are. So if I'm checking in, maybe you don't just want to reward transactional behavior, you want to reward behavior that promotes and advocacy. So I'm checking into Nando's, and Nando's gets publicity to all of my friends on Facebook, on Twitter, or on Foursquare, or whatever the case may be, which is very, very powerful. And I think the mobile also reduces the cost of loyalty programs. So for those who administer loyalty programs, SMS costs and email costs to make relevant offers are quite high. Letters definitely very, very expensive and very outdated, whereas in-app messaging is a lot more cost effective and a lot more relevant and less intrusive. I think we get a lot of SMSs these days that are unsolicited, that we don't want, that we get them from a company trying to sell us insurance or another company trying to sell us something else, and they never got permission according to the CPA, Consumer Protection Act. They should have got permission from us to communicate with us. So we've kind of switched off to SMSs. We get an SMS that's unsolicited, we're kind of not interested in it. It's almost like the old days of knock and drop, of having like letters in your post that you didn't want, so you just threw them in the bin, right? Where with an in-app message, if I see that there's a message, I might opt in to actually have a look at it, and I'll be interested in it because it was based on permission and it was based on something that I was interested in.
Interesting. Amanda, Sid raised the point about nothing's for nothing, no free lunches, which I think most people would agree with. Where is the price hidden in the so-called free reward scheme? It must be hidden somewhere.
I think different businesses have obviously different business models. I mean, I know some of the organisations in South Africa work very closely with their suppliers, and their suppliers understand that they will be funding some of the points, whether it's in the retail industry or the banking industry. We heard Yolande earlier. So there's a different elements of the value chain will be contributing to this, and I think it's absolutely critical that as Sid said, if there's no such thing as a free lunch, the end consumer must not be directly paying for this, but the indirect impact, the organisation absolutely has to do everything to avoid passing it on to the customer. They should be able to work a loyalty program in such a way that it isn't just paying for the points, but it's actually paying for the market share gain that they should be getting by luring this customer into their brand rather than that customer spending their rands in the competitor space. So it's a cost to them which should be significantly less than the incremental sales and profit that they gain. And that's always the business. That's the basis of the business models I've always worked with clients is you can't do these programs and you shouldn't embark on these programs if you're simply layering in a cost of sale. You must do it to gain market share. You must do it to drive incremental profits to your business, which comes at the expense of your competitors if you do it right.
Do you think consumers are realistic when they look at loyalty programs and they think it's going to save them a fortune? And as we've established, it's only about 1%.
It is only about 1% normally, but back to, if I may comment on what Sid said, say in the pick and pay space, it's very difficult to just get 1% on the Smart Shopper program, for example. So the base points are 1%. But if you visit the kiosk, you'll get triple points or double points off products that should be relevant for yourself. Then they have double points days. And then obviously Craig's mentioned the Vitality link. So even if you don't have Vitality, it's still very difficult to get only 1%. And in ClickSpace, they 2%. Exclusive books is at 5%. The Thank You program, again, the base points are 1%, but they have times 10 bonus days. So you've got to... You almost are getting it completely wrong if you're only walking away with 1%. But 1% I don't think is enough to shift behavior for anyone. I mean, it's seriously a lot to ask people to. So it's what the brands are doing when they talk. They should be talking to these loyalty members on a regular basis through the different devices, whether it's through mobile, through social media, or through your other direct marketing, to offer the reason for a customer to come to your brand in the first place. The loyalty program is simply the icing on the cake. In my opinion, you cannot have a successful loyalty program if the rest of your product price promotion is not right. Loyalty will not save the day. You've got to get the whole marketing mix right.
So you used the word, Amanda's used the word, in fact you've all used the word relevance when it comes to a loyalty scheme. Define the relevance, if I can ask you all that, a relevance of a loyalty scheme. What exactly do you mean by that?
Relevance. You've got to look in the eyes of the different players in the whole process. For a customer, I think relevance is what is the monetary, let's call it the monetary or some other measurable value that I'm going to receive by shopping at this particular store as opposed to shopping at some other store. Now, if you're talking about a supermarket, the 1%, I guess that relevance is really just, it may not be enough, I think, to necessarily entice a customer into a store. However, with many of the, and I'm talking from my own experience with the Discovery Scheme, for example, there are many stores where you can get, in my case, up to 10%. Now, 10% is very relevant. It's extremely relevant. But the trouble, I'm not the normal customer because I kind of know in the back of my mind exactly what the card costs me and what Vitality costs me, and from that perspective, when I look at that relevance, and I say to myself, well, if I can make enough money out the discount to at least cover the cost of carrying the card and collecting the discount, well, then obviously it's relevant to me. So for me, relevance means something else, but something else in another way. But I think that's what relevance is to the customer, that the customer perceives him or her receiving some value out of it. Because one thing I think we've got to understand is that the customer's purchasing decision is ultimately made on the customer's perception of something, whether it's the customer's perception of that retailer being the cheapest or the customer's perception of whatever the case may be. That may not necessarily be true. The customer may think that Clicks is the cheapest. And I'm just using Clicks as an example. This mustn't it must not reflect on Clicks' position in pricing. But because the customer perceives Clicks in their mind, Clicks is the cheapest, therefore they go there. Clicks may not be the cheapest, or they perceive that game is the cheapest and they go there.
Do you think reward schemes have that perception? If there's one, it's cheaper.
Well, remember we spoke about the length of the Clicks scheme and the fact that even after so many years, it's still signing up new members because the customer's believes that the perception is receiving that little check or little voucher every 3 months. It's relevant to them, and that's why they continue making use of the facility. I think that's what relevance is all about at the end of the day. There's got to be, it's got to have some tangible value. Of course, my interpretation of tangible value is going to be different from somebody else's. So it depends on what your perception of tangible value is.
Thanks, Sid. We're going to take a short break. Classic Business and Classic Government brought to you by Telkom.
Head cocked to the left. First point of attack. 2. Throat. Paralyze vocal cords. Stop screaming. 3. Got to be heavy trigger. Floating rib to liver. Finally, dragging left leg. Fist to patella. Summary prognosis. Conscious in 90 seconds. Martial efficacy. Quarter of an hour at best. Full faculty recovery. Unlikely.
Mystery, dramas, suspense, faraway lines, intrigue, forgotten memories, unforgettable characters. These are the sounds of classic silver screen. Join me, Glenn Lewington, Monday to Thursday at 7:30 p.m. and Friday at 7 p.m. for an hour of the sounds of the silver screen. Come along on a journey into the world of cinema music. Classic silver screen. Classic Business and Classic Government brought to you by Telkom. Well, some other opinions on reward schemes. Here is Nicole, Merdjan, Rewards Club and Marketing Manager at Meltz. Nicole, what infrastructure is required to operate a rewards program? Is it just something as easily embarked on as it sounds?
It is pretty easy as it sounds. Basically, you need a solid infrastructure, though. So you should get the right IT people involved to help you to set out the parameters and then build upon that by using your point-of-sale software to integrate your loyalty program into, and that allows you to get strategic results and decisions can be made from there.
Do you think the rewards market, and as we've learned, there's about 80 in the South African market at the moment, is that saturation point?
I don't think so. I think the South African rewards market is still in its infancy. So it hasn't reached saturation as yet. Everyone wants to save something somewhere and wants to stretch their wallet. So I think it's one of the appeals of a rewards program. So no, it's not saturated. I think customers are expecting it.
And customers, I think a lot of the demand that they have is that they want a simple rewards program. Would you agree with that?
Yes, I think it is definitely what they're looking for, and that's why we've designed the Meltz Rewards Club as simple as possible.
And when you say simple as possible, give us an idea how that works.
All right, well, basically, we put thresholds in place, but you just need to spend 100 Rand or more, and then you can start earning points. And then basically our point structure is for every 50 Rand you spend, you get 1 point, and 1 point is equivalent to 2 Rand, so it's very easy for them to figure out how it works. Then how we do it is basically when they shop at our stores, they get an invoice anyway, and on the bottom of the invoice is a full statement of what's available and what they've earned and the Rand value of that.
And the Rand value, does it have to be, do you have to earn a certain amount before it can be cashed in?
Yes, there is another threshold there, but it's only 6 points or 300 Rand, and then they can redeem their points immediately on their next purchase as a discount.
What is customer service like for rewards programs? Have you found that a learning curve for your company?
I think it's a great way to develop customer relationships and to build a bond with your customers, to learn about them, their behavioral patterns, their psychographic information, demographic information, so that you're able to segment them and target the relevant information to them and the relevant product to them.
Customers often complain about reward systems, and given from a company's perspective, do you think customers often don't understand the system that they're actually on?
I think that is something that happens, but there again, if your cashiers in our instance are able to educate the customer there and then and tell them the simplicity of the campaign, I don't think that they're in for any nasty surprises. And in fact, in our business, we don't have that many complaints about the program. It's what they expect and what they expect they get.
Have prices been marked up to accommodate this discount?
I think the prices are built into the margins of a business when it comes to points. So no, not really. What we try to offer as an upscale discounter is the best value, the best product and brands to our customer, and then obviously the added value and benefit of a rewards program that helps them to save even more money and spend more money and enjoy shopping with us.
And what made Meltz decide on a rewards program?
Right. I think in the beginning we decided on a rewards program in order to get information and profile our customer base, and also to entice the right kind of customer behavior patterns through our business, to create a base that we can communicate with and share our amazing offers with. And it works very well with that.
Do you actually look at the information that the clients actually give you?
Yes, I do. I do personally. We actually pull the information through to a system, so it's not on an individual basis. We use it globally and within segments.
Nicole Merdjan, Rewards Club and Marketing Manager, Meltz. Thank you for speaking to us on Classic Business and Classic Government. 19 minutes past 7. If we can continue, and we've basically got about 10, 11 minutes just to wrap up the program. I think the whole issue of relevance is quite important, especially for consumer. And Craig, if I can ask your opinion on the relevance.
So, I'd certainly agree with what Sid is saying. Maybe a word saying like alignment and partnership, I think, are also important. So when we look at Vitality, we're saying, yes, there's benefit to us as a business, but how do we make these similar benefits and align with what our customer needs are? And so when we look at things such as healthy food, where someone would go into a Pick and Pay and have a choice between full cream milk or fat-free milk, and the one's 25% less, it then becomes a much easier decision for them to make. And so you're relevant at that point of purchase. And I think it's also then looking at what partnerships that you add to see what are our customers' needs, what are they doing, and what would they feel is beneficial. So it's not just about the pure what we get, the rewards, but what are the steps along the way, getting people to exercise, getting them to lose weight. I actually got a letter from a member, it was actually earlier on this week, where he said he has a triple XL shirt that he was wearing, and he then had a minor myocardial infarct heart attack. And he kind of wrote this whole letter how Vitality helped him to get back on track. And I know these things are often anecdotal, but it was really quite amazing to see that alignment and that relevance, because giving him access to lowering the barriers to be able to purchase healthy food, to get into a gym program, getting to a dietitian, those type of things. And then, he goes on sort of saying he's been on one of the cruises where you get a discount. And it's not that everyone's going to afford those type of things, but it's those sort of goals that people set. And that's really what we help to do, to help them set those personal goals and reward along the way. So that relevance for us is about health relevance or behavior relevance. So as I said earlier, around Discovery Insure, getting people to drive better, decreasing accidents, making the road safe is obviously our bold vision for it. But along the way, you're rewarding people. And I believe that that's the type of relevance as opposed to purely just purchasing more of my product.
Yaron, your thoughts on that?
Well, I think that all loyalty programs are initiated to get to know customers better and to be able to personalize the experience for the customer. And the deeper the relationship with the customer, the more relevant the relationship would be. So, for example, if you analyze transactional behavior and you know that I'm about to run out of a product, being relevant is sending me a reminder that I should auto-replenish a particular product if I need it. And I'm obviously interested in it. So the brand or the organization gets to know the customer and making offers relevant to them based on their own personal preferences, things that they either tick that they're interested in, or that they've learned from their transactional behavior, or even from a social behavior where I rated a particular book. So, for example, Amazon.com is really brilliant at making the right recommendations to their customers based on what they've read before. I might not know that a new book has been released from an author that I really, really like. The moment I get a relevant email to me that says there's a new book by a particular author, I might be more inclined to buy that book, and then for the brand would get a higher wallet share and will keep me as a customer because their communication with me is far more personalized and it's based on my behavior and the kind of relationship that I have with them. And I think we're all different and we want to be treated differently. So if you have the same kind of communication with all your customers but just personalize the name, then I don't think that's relevant communication. If it's communication to me based on what I'm doing, my lifestyle, the way I'm interacting with a particular brand that's very relevant to me at the time of purchase, then I'm more likely to feel that I really have a relationship with that brand and I want to spend more money and stay in that relationship longer. Today we've got a lot of choice. There's a lot of different insurance companies, a lot of different banks, a lot of different retailers. Everybody wants to have a relationship with you, but they don't really analyze the behavior and they don't really work hard at the relationship. So it's all about understanding, getting real customer insight and making the communication relevant. For me, that's what relevant communication is all about.
Amanda, what is the difference between a customer's perceived benefit? Do you think they have larger expectations than the actual benefit when they receive it?
Yes, I think a lot of the programs are built to create a greater perceived benefit than the actual cost necessarily to the organization giving it. So, for example, you might have a SPA experience that may be eBucks or greenbacks from the banks. SPA
as in S-P-A?
Yes, sorry, health spa. And that might actually be of perceived value to me of 350 Rand for a massage or a facial, and yet actually it may have only cost the equivalent of 100 or 50 Rand to the brand that's offered it to me. And those kind of programs work really well because I feel like I'm getting something for nothing, I feel like I'm getting something great, and yet the economics as such mean that the brand giving it to me isn't passing on the price necessarily because they're able to get it at such a reduced fee. And then there's very clever ways that you can create, not by fooling the consumer just because of the structure of how things are paid for. You can create greater value and greater perceived value than what effectively could have been seen as 1%. So, for example, slightly off the question, but sometimes there's a confusion in the marketplace between loyalty and just good old-fashioned product value proposition. So I take out a FNB credit card. I don't need another credit card, but I take it out because it gives me access to the Slow Lounge. Now, the Slow Lounge is 250 Rand a hit if I have to pay for it, and my annual fee is 500 Rand, and I travel a lot. So in one trip, the perceived value of that credit card, I've paid for it. Whereas I know it doesn't cost, I'm sure it doesn't cost FNB 500 Rand to get me in and out of the Slow Lounge twice. So you can use, the perceived value is a very good question, and it's very critical because it has different connotations for the different customers, and that's why you've got to go back to what all the other speakers were saying around the relevance. Because a slow lounge may have absolute relevance for me and no relevance for another consumer set.
Absolutely. Yaron, I see you nodding again.
Yeah, I think technology today also makes it much easier to make offers relevant. I mentioned earlier the locality, or what I say on social. And I think that it's about listening to customers. Relevance comes from listening and from the ability to really understand customer behavior and tailoring the experience based on previous behavior and potential behavior as well. I know that a lot of the programs have actuaries that work for them and try and build predictive modeling. That's the next level of kind of personalization is predictive intent. Trying to understand what the customer is going to want to do next and simplifying the relationship with them. So, for example, I didn't know about having to rotate your tires on your car to get extra mileage from it. So when I get an SMS from Bridgestone telling me that I should rotate my tires because I bought them, like, let's say, a year ago, and I get more mileage from the tire, that will build relevance and will want me next time I want to buy tires, I'll think about Bridgestone Firestone as a set of tires for my car, and that's very relevant to me. So if the brands use the communication to educate customers, I think they're going to achieve a long-term loyalty from those customers.
Very briefly, Craig, your final points.
Well,
and I don't mean loyalty points.
I'll have to give you some vitality points for that. I think the reality is that we are seeing a lot, as you're saying, in South Africa, over 80 loyalty programs. And I think it's important for how do companies differentiate in that space. And all the things you've spoken about, the relevance, I think the innovation is critical as well. That, this isn't something that you put out 1% or you give some points, but that you continue to innovate, continue to look at partners, continue to look at the trends locally and globally. And for us, I think if I look at Vitality Program and the amount of research we've done, the published of scientific papers, I think it's really an exciting space for us as a business. And what's interesting, I think from a South African point of view, there was an article in The Economist earlier on in the year talking about, Vitality Program and the good things that are happening in South Africa being taken to other parts of the world. And for us, it's something that we're very proud of as a South African company, to be able to build these things in South Africa and take it overseas. And companies are approaching us. So it really is an exciting space, and we're looking forward to continue to innovate around wellness globally.
Thanks very much, Craig. Sid, final words of wisdom from The Economist.
Well, interesting, you call me an economist now, but...
well, you work for a bank.
No, sure. But I think the big challenge for the issuers or the creators of the reward programs is to maximize the value from the program. Let's forget about the 1 or the 2 or the 10 or whatever it is %. But I think it's very important for the retailer to be able to take the database, this huge amount of information that's now being collected, and remember, every single day that goes by, there's another level of information that's been loaded onto the computer systems, and to be able to have the technology, to have the people to interpret and data mine that information, to be able to be better than the competitor, because ultimately, you may well find a situation where every single competitor has a loyalty card. So we're probably back to square one. But the retailer who is better able to data mine and better able to interpret consumer trends, predictive behavior, so to speak, will be the ultimate winner. And I think that's the big challenge, and that's the big that's what we've got to wait for going forward.
Thank you very much to the panel. Sid Vianello, Retail Analyst at Nedbank, Dr. Craig Nossel, Head of Wellness Discovery Vitality, Yaron, Assabi, CEO of Digital Solutions Group, and on the phone line, Amanda Cromhout, CEO and founder of Truth. Thanks to the producers, Mosehla Gwangwa and Lee Kern, our technical engineer Titus Mashava, the Classic FM News team, Jonathan Adams, Khomotso Mata and Ayande Malanse. Please join us tomorrow night for our 30-minute Classic Business at 6 o'clock. And you've been listening to a live broadcast of Classic Business and Classic Government, brought to you by Telkom. Don't go away. I'll be back with Classic Silver Screen in just a moment. At 7:30. Good night.